Right now, as you are watching this video, there is a very real chance that the United States government owes you money, not sometime in the distant future, not after a long, complicated process that takes years. Right now, we are talking about a tax refund that could be worth hundreds of dollars, and in many cases, well over $1,000 that millions of ordinary Americans have never claimed. This money was set aside during the COVID-19 pandemic as part of the federal government's emergency relief efforts, and because of how the tax rules were written, a significant number of people either did not know they were entitled to it, filed their taxes incorrectly, or simply missed the window the first time around. The IRS has confirmed that billions of dollars in unclaimed COVID-related tax refunds are still sitting there, waiting to be collected, and there is still time for many people to do something about it. But that window is not unlimited, and if you do not act, that money could disappear forever. So stay with us, because in this video, we are going to walk you through exactly what this refund is, who qualifies, how much money we are talking about, and precisely what you need to do to claim what may rightfully be yours. Hello, everyone, and welcome back to U.S. Benefits Update. I am your host, Claire Hollister, and if you have been watching this channel for any length of time, you know that our mission here is simple. We cut through the confusion and the noise, and we bring you the real information about government benefits, tax programs, financial relief, and policy changes that could put money back in your pocket or protect the money you already have. Today's story is one of the most important ones we have covered in a very long time, and that is saying something given everything we have reported on over the past several years. We are talking about COVID-era tax refunds that millions of Americans may still be eligible to claim, and we are going to explain all of it in plain, clear language so that whether you are a first-time viewer or you have been with us since the beginning, you will walk away from this video knowing exactly where you stand and exactly what to do next. So please stay with us all the way through, because the details matter, and missing even one piece of this could mean leaving money on the table that belongs to you. Here is the core of what we know and why this is such a significant story right now. The Internal Revenue Service, which is the federal agency responsible for collecting taxes and distributing tax refunds, has publicly acknowledged that there are tens of millions of Americans who were eligible for COVID-related tax credits and relief payments, but who either did not file a tax return for the relevant years, filed a return without claiming everything they were entitled to, or received less than they should have because of errors or misunderstandings in the process. The specific programs we are talking about include the Recovery Rebate Credit, which is the official tax mechanism connected to the 3 rounds of stimulus checks that were issued during the pandemic, as well as other pandemic-era provisions that affected how certain income, credits, and deductions were calculated. The IRS has taken the unusual step of proactively identifying some of these cases and, in certain situations, has already begun sending payments to people who did not even need to file an amended return. But here is the critical thing you need to understand. Not everyone falls into that automatic payment category. For many people, especially those who did not file a tax return at all for 2020 or 2021, or who filed incorrectly, the responsibility to come forward and claim those funds still falls on them, and the deadline for doing that is not open-ended. The tax code imposes what is called a statute of limitations on refund claims, which means there is a hard cutoff after which the IRS will not and legally cannot issue a refund no matter how valid the claim might be. That deadline is real, it is coming, and it is why this story is so urgent right now. To really understand why so many people are in this situation, we need to go back to the beginning and walk through what happened during the COVID pandemic and how the government's response created this complicated landscape of unclaimed money. When the pandemic hit in 2020, Congress moved quickly to pass a series of massive economic relief packages. The first was the CARES Act, passed in March of 2020, which authorized the first round of stimulus payments. Then came additional legislation in December of 2020 authorizing the second round, and finally the American Rescue Plan Act of 2021, which authorized the third and final round. Together, those 3 rounds of payments represented one of the largest direct cash distribution efforts in American history, sending checks and direct deposits to hundreds of millions of people. But the mechanism by which those payments were delivered was complicated in a way that many people did not fully appreciate at the time. The stimulus checks were technically advance payments of a tax credit called the Recovery Rebate Credit. What that means is that the government calculated what it believed you were entitled to based on your most recent tax return on file, usually 2019 for the first payment and 2019 or 2020 for the subsequent ones, and then sent you that amount in advance. The idea was to get money into people's hands quickly, before they had filed their 2020 or 2021 tax returns. But because the payments were based on older information, they were not always accurate. Here is where things got complicated for millions of people. If your income in 2020 or 2021 was lower than it had been in 2019, you might have been entitled to a larger payment than what you received, because the credit phases out at higher income levels, and if your income dropped, you moved into a more generous eligibility range. Similarly, if you had a baby in 2020 or 2021 and the government did not know about that new dependent when it calculated your payment, you were likely shorted. If you were a college student who was claimed as a dependent in 2019 but became independent in 2020, you may have been missed entirely. If you experienced a major life change of any kind that altered your tax situation between the time the advance payment was calculated and the time you actually filed your return for that year, there could be a gap between what you received and what you were actually entitled to. And the way to close that gap, the mechanism the tax code provides for doing exactly that, is the Recovery Rebate Credit on your tax return. For people who did file their 2020 and 2021 tax returns and correctly claimed the Recovery Rebate Credit for any shortfall, the system worked more or less as intended, and those refunds were issued. But there is a substantial group of people for whom things did not work out so cleanly. Non-filers are perhaps the most significant category here. These are people who had very low incomes and therefore had no legal obligation to file a federal tax return, but who were nonetheless entitled to the stimulus payments and the Recovery Rebate Credit. The IRS initially tried to reach many of these individuals through its non-filer tool, but many people either did not know about that tool, did not have reliable internet access, did not trust the process, or simply fell through the cracks. For these individuals, filing a 2020 or 2021 tax return, even if they were not legally required to do so, was the only way to claim the money, and many of them never did it. So let us talk specifically about who qualifies for these unclaimed refunds, because this is the part of the story that most directly affects whether you personally need to take action. The eligibility rules for the Recovery Rebate Credit are based on several factors, and it is worth going through each of them carefully so you can assess your own situation. First, and most importantly, you must have been a U.S. citizen or a U.S. resident alien in the year for which you are claiming the credit. You also must not have been claimed as a dependent on someone else's tax return for that year. If you were a full-time college student and your parents claimed you as a dependent in 2020, you generally would not be eligible as an individual for that tax year. However, if your circumstances changed in 2021 and you were no longer claimed as a dependent, you could potentially be eligible for the third round of payments through your 2021 tax return. Income is the other major eligibility factor. The stimulus payments and the Recovery Rebate Credit were designed to be fully available to individuals with adjusted gross income up to $75,000 per year, or up to $150,000 for married couples filing jointly. There was also a phase-out range above those thresholds, meaning people who earned a little more could still qualify for a partial credit. The payments phased out entirely for individuals earning over $87,000 for the first 2 rounds, or $80,000 for the third round. For married couples, those cutoffs were $160,000 and $160,000 respectively for the first two rounds, and $160,000 for the third. Here is a crucial point that many people overlook. The eligibility determination is based on your income in the year for which you are claiming the credit, not the year the advance payment was issued. So if the government calculated your advance payment based on your 2019 income and you earned too much in 2019 to qualify for the full amount, but your income dropped significantly in 2020 because of the pandemic, you may actually be eligible for a larger credit when you file your 2020 tax return than what you received in advance. You would claim the difference as a refundable credit, meaning even if you owe no taxes, you get the money back as a refund. That is a powerful provision that too many people are not aware of. Beyond the recovery rebate credit, there are other pandemic-related tax provisions that some people may have missed. The Earned Income Tax Credit was temporarily expanded for 2021 to cover more workers, including childless adults who historically did not qualify, and to allow people to use either their 2019 or 2021 income, whichever produced the larger credit. The child tax credit was also significantly expanded for 2021, and the child and dependent care credit was made more generous. If you had children in your household in 2021 and did not claim these credits or claimed smaller amounts than you were entitled to, an amended return or a late original return could generate a meaningful refund. Now, let us talk about the actual numbers because people rightly want to know how much money we are discussing here. The 3 rounds of stimulus payments worked out to maximum amounts of $1,200 per eligible adult for the first round, $600 per eligible adult for the second round, and $1,400 per eligible adult for the third round. For families, there were additional amounts for each qualifying dependent child. In the third round, dependents of any age could add $1,400 to a family's total payment, which was a significant expansion from the first 2 rounds, which only counted children under 17. Add those 3 rounds together, and a single eligible adult could have received up to $3,200 in total stimulus payments. A married couple could have received up to $6,400. A family of 4 with 2 children could potentially have been entitled to up to $8,800 in total across all 3 rounds. Those are meaningful sums of money for any household, and they represent the maximum amount that could have been missed by someone who fell through the cracks of all 3 rounds of payments. Most people who are in the category of potential claimants did receive at least some of their payments and are looking at smaller shortfalls, but even recovering $500 or $1,000 that you were rightfully owed is absolutely worth the effort. The IRS has also separately confirmed that it identified approximately 1 million taxpayers who filed 2021 tax returns but appeared to have missed the recovery rebate credit or claimed an incorrect amount. For those individuals, the IRS took the step of automatically calculating the correct credit amount and issuing payments without requiring those taxpayers to file an amended return. The average payment amount for that particular group was around $900, with some payments reaching as high as $2,500. If you were in that group and filed a 2021 return, you may have already received a check or a direct deposit without even realizing what it was for. But if you did not file a 2021 return at all, you were not part of that automatic payment effort, and you would need to take action yourself. The timeline on this issue is something we need to address very directly because it is the element that creates the most urgency and the most risk of people losing their opportunity to collect. The IRS generally allows taxpayers 3 years from the original filing deadline to claim a refund. The original filing deadline for 2020 tax returns was April 15, 2021. 3 years from that date is April 15, 2024. Now, before you panic and think the window has already closed for 2020, it is important to know that the IRS granted automatic extensions due to the COVID pandemic that pushed the effective deadline for non-filer claims to May 17, 2024 for 2020 returns. If that date has already passed by the time you are watching this video, the opportunity to claim a refund based solely on a first-time 2020 return may unfortunately have closed. However, for 2021 tax returns, the picture is more hopeful and more urgent at the same time. The original filing deadline for 2021 returns was April 18, 2022, which means the 3-year statute of limitations deadline falls in April of 2025. If you never filed a 2021 tax return and believe you may be entitled to a refund based on that year's eligibility, the clock is still running, but it is running fast. You need to act before that April 2025 deadline, and the earlier you act, the better, because preparing and filing a tax return takes time, and if you are working with a tax professional, their schedules fill up as deadlines approach. For people who did file a return for 2020 or 2021 but believe they claimed an incorrect amount for the recovery rebate credit, the vehicle for correcting that is an amended return, which is filed on IRS Form 1040X. The same 3-year statute of limitations applies to amended returns seeking a refund. So if you filed your 2021 return in April of 2022 and you now realize you claimed the wrong amount, you have until approximately April of 2025 to file that 1040X and claim what you are owed. Again, that window is shrinking, and waiting is a risk you do not need to take. One more important timeline note. The IRS processes amended returns much more slowly than original returns. In normal times, an amended return can take 16 weeks or more to process. Given the backlogs the IRS has been working through, that timeline can stretch even longer. What this means in practical terms is that filing sooner gives you a better chance of seeing your money before you need it. And filing close to the deadline means you might be waiting quite a while after the deadline before the refund actually arrives, assuming the IRS receives and validates your claim before the cutoff. Tax professionals, consumer advocates, and government watchdog organizations have been drawing attention to this issue for some time now, and the tone of their commentary ranges from hopeful to genuinely alarmed. On the hopeful side, many tax experts have praised the IRS for its proactive effort to identify and automatically pay approximately 1 million taxpayers who missed the recovery rebate credit on their 2021 returns. That kind of initiative is not something the IRS does often, and it reflects a recognition within the agency that the complexity of the COVID relief programs created genuine confusion that was not entirely the fault of individual taxpayers. On the alarmed side, a number of tax attorneys and enrolled agents who work with low-income taxpayers have expressed serious concern about the population of non-filers who have still not been reached. These advocates point out that the people who never filed 2020 or 2021 tax returns because they had very low incomes are often the same people who were most financially devastated by the pandemic and who could benefit the most from the refunds they are owed. They are also, almost by definition, the people who are least likely to have a tax professional helping them, least likely to be plugged into news sources that would alert them to deadlines, and most likely to distrust or feel intimidated by any process that involves the IRS. Getting information to these individuals is genuinely difficult, and the clock ticking down on the statute of limitations means every day of delay is another day of risk. The National Taxpayer Advocate, which is an independent office within the IRS that represents taxpayer interests, has issued reports specifically highlighting the concern about non-filers losing their pandemic-era refunds to the statute of limitations. The Advocate's Office has recommended that Congress consider extending the deadline for these specific claims, given the extraordinary circumstances of the pandemic and the documented confusion around the relief programs. As of the time of this report, however, no such extension has been enacted, and taxpayers should plan based on the existing deadlines rather than hoping for legislative action that may or may not materialize. Tax preparation organizations that serve low-income Americans, including the Volunteer Income Tax Assistance Program and similar nonprofit services, have been working to reach non-filers and help them understand their options before deadlines expire. These organizations provide free tax preparation services to eligible individuals and can help people file the returns they need to claim their refunds at no cost. This is a resource that is genuinely underutilized, and if you or someone you know is in the situation where they need to file a late return and cannot afford professional help, reaching out to one of these organizations could make a meaningful difference. Let us bring this down to the level of real people and real families, because the aggregate statistics about billions of unclaimed dollars can sometimes feel abstract in a way that makes it harder to understand the genuine human stakes of what we are discussing. Think about a single mother who lost her job at the beginning of the pandemic in 2020. Her income dropped dramatically that year. Because her income in 2019 had been too high to qualify for the full first-round stimulus payment, she received a partial check. But her 2020 income was low enough that she was entitled to the full $1,200 for that round. Had she filed a 2020 tax return and correctly claimed the recovery rebate credit for the shortfall, she would have received the difference as a refund. If she did not know to do that or was not able to navigate the filing process on her own, that money was left unclaimed. Or think about a college student who graduated in 2020 and was no longer claimed as a dependent by their parents starting with the 2020 tax year. As an independent adult with their own 2020 tax filing, that student was potentially eligible for the full amount of all 3 rounds of stimulus payments because they were no longer a dependent who had made someone else ineligible for the dependent add-on amounts in the earlier rounds. If that student never filed a 2020 return because their income was low and they did not know they needed to in order to claim the credit, that is potentially thousands of dollars in unclaimed money. Think about a retired couple living primarily on Social Security income with a very small amount of investment income. Because their overall income was low, they may not have had a traditional obligation to file a federal tax return in recent years. They received their stimulus checks but may not have received the full amount because of calculation errors based on their most recent filed return. Without filing a return for 2020 or 2021, they have no mechanism to claim the shortfall, and if the deadline passes without action, that potential refund is gone. For a couple on a fixed income, even a few $100s represents a meaningful amount of financial breathing room. And consider the impact on immigrant communities. Many lawful permanent residents and green card holders were eligible for the stimulus payments but faced significant confusion about whether they qualified, in part because of changing rules and in part because of language barriers and lack of access to reliable information in their native languages. Some did not file returns because they were unsure of their status or were afraid of drawing attention to their immigration situation, even though filing a tax return does not affect immigration status for lawful residents. For these individuals, untangling the confusion and filing the appropriate returns before the deadline is both practically complex and emotionally charged, but the financial stakes are high enough that it is absolutely worth pursuing. Retirees and seniors deserve special mention as well. Many older Americans live on fixed incomes and were not regular tax filers before the pandemic because their income from Social Security and modest retirement accounts fell below the filing threshold. These individuals received some or all of their stimulus checks through the non-filer process or through cross-matching with Social Security records. But not all of them received the correct amounts, and some received nothing because they were not in any of the databases the IRS used to identify non-filers. For this population, the concept of filing a tax return for a year that may be several years in the past can feel overwhelming and unfamiliar, which is exactly why the free assistance programs available through organizations like AARP and the Volunteer Income Tax Assistance Network are so valuable. We have covered a lot of ground today, and we want to make sure you leave this video with the most essential information clearly in your mind. So let us do a final summary of everything that matters most. There are billions of dollars in unclaimed COVID-related tax refunds that may still be available to eligible Americans, primarily through the Recovery Rebate Credit, which is connected to the 3 rounds of economic impact payments issued during the pandemic. The amounts involved range from a few $100s for individuals who missed partial payments to several $1,000s for families who missed substantial portions of multiple rounds. You may be eligible to claim these refunds if you did not file a 2020 or 2021 tax return and had income that would have qualified you for the stimulus payments, if you filed a return but claimed an incorrect amount for the recovery rebate credit, if your income in 2020 or 2021 was lower than in 2019 and would have entitled you to a larger payment than you received, or if you had dependents in 2020 or 2021 who were not accounted for in your advance payments. The deadline for claiming refunds based on 2021 tax returns is in the spring of 2025, meaning time is genuinely running short and action needs to be taken soon. To take action, you can file a late original tax return for 2020 or 2021 if you never filed one, or you can file an amended return using Form 1040-X if you filed but claimed incorrect amounts. Free tax preparation assistance is available through the IRS Free File Program, the Volunteer Income Tax Assistance Program, Tax Counseling for the Elderly, and AARP Foundation Tax Aid. The IRS website at irs.gov has resources specifically for non-filers and for people who need to file amended returns. You can also use the Get My Payment tool on the IRS website to check on the status of any payments you may have been issued. And please, be cautious about paid services that claim to help you recover stimulus money for a fee, because in many cases, those fees eat up a significant portion of your refund, and the same work could be done for free through legitimate assistance programs. The bottom line is this: if you have any reason to believe that you may not have received everything you were entitled to from the COVID relief programs, the time to find out and take action is right now. Not next month, not next year. Now. The statute of limitations is a real and absolute constraint, and once it passes, no amount of evidence or good intentions will get you that money back. We urge you to check your records, reach out to a tax professional or a free assistance program, and make sure you have not left money on the table that belongs to you. Before we wrap up today's video, we want to hear from you. Have you already received a COVID-related refund that you were not expecting? Are you in a situation where you think you might be owed money and are not sure where to start? Drop your questions and your experiences in the comments section below. Our community is active and engaged, and there is a good chance that someone in our audience has already been through a similar situation and can share what worked for them. And if you know someone who might be in the situation we described today, a family member, a friend, a neighbor who might not have filed their pandemic year tax returns, please share this video with them. This kind of information can genuinely change someone's financial situation, and sharing it costs you nothing. If this video was helpful to you, please take just a moment right now to give it a thumbs up. It truly makes a difference in helping our channel reach more people who need this information. And if you are not already subscribed to US Benefits Update, please subscribe right now and click that notification bell so you are alerted every single time we publish a new video. We cover government benefits, Social Security, Medicare, tax updates, financial relief programs, immigration news, and everything in between, and our goal with every single video is to give you the clear, accurate, actionable information that helps you make better decisions for yourself and your family. I am Claire Hollister, and on behalf of everyone here at US Benefits Update, thank you so much for watching. We will see you in the next video.